slowing down a little bit. So why don't we slowly get started? Okay, thanks for joining us. Welcome to the second Compliance Quarterly webinar for 2026, brought to you by the Colorado Department of Labor and Employment. I am Cher Hoven, the Deputy Executive Director for CDLE, and joining me today, we have some esteemed panelists representing four of our regulatory divisions here to share with you rule and reg updates, technology updates, and opportunities for you to engage with the department. A little bit of housekeeping. When we get to the Q&A section, if you could please add that into the Q&A if you're joining us via Zoom. If you're joining us via YouTube, if you can add your question into the comments section. All of this content will be shared with you by way of a recording of the webinar after today's session. We also really want to hear from you. Are these opportunities to engage with us useful and informative? Are there things you'd like to hear about from the department that we're not including? So please take a second to complete the feedback survey that we also send out after the recording. So with that, I am going to go ahead and turn it over to our paid family division to provide us with some quick updates.
Thank you. I'm David Gallivan. I'm the Policy and Appeals Branch Manager for the Paid Family and Medical Leave Insurance Program, or as we fondly call it, Family. The name's so nice, it's been stolen at least twice by our friends in Minnesota and Maryland for their similar programs. Jumping right in, first item for today, the premium overpayment certification and refunds. So this is arising from those employers who paid premiums to us in 2023 before the program was live, but then opted to be covered by private insurance. Those organizations are entitled to a refund of the premiums that they paid in 2023. It is now 2026, and we have spent some time trying to return that money to you. And what we decided last year was we were just going to return it. So we put checks in the mail. With that, though, because those premiums included contributions from your employees, what we need is a certification that the money that was collected from the employees was returned to them. If we haven't received that, if we sent you a check and we haven't received that certification that you gave back the employee premiums, we might be looking at an audit to make sure that that money is going to the right people. We want to make sure that employers, you get your money back, but also that your employees get the money back that they are entitled to. So that should be a high priority if you received one of those checks. Also, if you've received that check and you haven't cashed it, that money is cheats to the Treasury after 6 months. That means it goes to Dave Young to do with as he wants. So please do make sure to cash that check. That's your money. We want to make sure you get it. Also, pay attention to our required program notice. You're required to distribute this to employees at hire. It's supposed to be posted somewhere accessible in your workplace on both English and Spanish. It should be online within 2 clicks of whatever your homepage is. And anytime you have an employee who experiences a qualifying event, they should get notice that they might be eligible for family. So if somebody comes to you and says, hey, I might need to take some time off because I have a family member who's sick and I need to go take care of them, or I'm going to be scheduling a surgery. That's an indication that they may be eligible for family, and you should give them the program notice. This is something we enforce, it is something we investigate, and it is something that in some cases we will impose penalties on. So you do want to make sure that you're doing that. We will be paying attention to that. Moving on to some other updates. Nothing explicitly planned on our rulemaking schedule. We will be doing a rulemaking in the fall. We'll be reaching out to our stakeholders probably late next month to start talking about what that's going to look like, but we don't have our firm schedule yet, and we don't have proposed rules for you to look at yet. We do have some tech updates coming. Every number on this slide represents time that you're getting back. They're things that we're doing faster in order to facilitate your business processes. Since we set our September baseline, our ticket resolution has dropped from 84 hours to 50 hours. We're really proud of that. Our goal was 72. So we're resolving those tickets much faster than we thought we were going to be able to. Bulk payment processing went from 20 hours to 4 hours. Wage processing, when you upload those wage reports, went from 27 minutes, which is probably pretty good for those large files, to 3. And calculation of premiums has gone from 6 hours to 14 minutes to calculate out the premiums that are owed on those wages. We're hoping that translates into fewer follow-up calls, faster resolution, less administrative lift when your employees need leave. And we just introduced a new, or we just rolled out a new enhancement to our system. This went live recently, built around the feedback we've received from employers. You can now upload up to 15 files at once across registration, applications, and annual tasks. So we're trying to make that easier for you. Uh, Smarter contact routing. So you can set your preferences once and notices will go to HR, wage goes to payroll, finance correspondence goes to finance, so that you can choose where messages from us go within your organization. Claim notices are consolidated into a single tab, searchable by date, claimant, keyword. The attestation that used to require opening each record individually now happens in a single action. And large employers with 10,000 plus employees can run wage searches instantly. And plan status, activations, deactivation, coverage tracking, automatic updates automatically overnight. The through line across all of it, we're trying to make family simpler than ever for you and your team, and we rely on your feedback to do that. So if you have something that's not working for you, please let us know, and we will look at that and consider it for a future update. And then our next slide is just some resources and toolkits. We always have these available. If you have questions about family, it's a great starting point, but you can also always reach out to us. And with that, I will wrap it up for family, but I will still be here for questions at the end. And I will turn it over to Victoria Hull from Unemployment Insurance.
Thanks, David. Hi, all. I'm Victoria Hull, and I'm here to give some updates regarding the Division of Unemployment Insurance. Thank you. We do have some upcoming deadlines and effective dates that you'll want to make note of if they do apply to you. Employee leasing companies and professional employer organizations' annual reports deadline is coming up. It will be due Tuesday, June 30th of this year. Those forms have been mailed out, and there is a blank form also available on our website. We do request that you mail these back because you're not able to do it in the MyUI employer system at this time. If you do have questions, please feel free to reach out to us, and any representative should be able to assist you. With that said, we're also going to send out an email reminder on this as well, just to make sure that all of our PEOs are getting this information and can get that information over to us by the deadline. We also have a employer charging correspondence schedule change. So this recently changed in April of this year. Quarterly charging correspondences will now be available on the 5th day of the month following the end of a quarter. Impacted correspondence includes the quarterly statement of benefit charges and the quarterly reimbursable bill. And then payment is due 30 days after the mail date listed, if applicable. This is a really nice enhancement because we're able to get you that information quite a bit sooner. It used to be mailed on the 25th of the following month. So we've definitely made some changes to just timeline on that, and it will be more in line with our other statements that go out as well. And thank you. And then just some other upcoming deadlines and effective dates. In regards to electronic communication requirements, UI fact-finding requests are no longer sent to employers and TPAs via paper mail. They must be delivered and responded to by electronic means in accordance with state electronic communication requirements. So please ensure that you are doing that. Ensure that your UI account information is also up to date with a valid email address. This is so important for us to have this information on file with the shift to electronic. So please go and check on that information when you can. Additionally, the UI delinquent premium penalty or DPP assessments have been sent out to the applicable employer accounts. These accounts will be any account that had a balance due as of June 30th in the prior calendar year. So if there was a premiums balance due June 30th of 2025, your account may be subject to a delinquent premium penalty this year Every quarter, it is broken down so that you can pay it quarterly as opposed to all at once. And that will be reflected on the statements. And I believe that's on the next slide. Yep, so there's that some tech updates there. Those amounts will be reflected on the notices of amount due that go out monthly. You'll also see it in your MyUI Employer Plus account, again, if it's applicable to you. Additionally, multiple protests can now be submitted online on the same UI statement of benefit charges using the SSN field on the statement screen, which is also a really nice update for responding to protests. And then with that said, we can also now edit and deactivate duplicative or unused TPA accounts. Sometimes we get a lot of TPA accounts set up for the same third party for various reasons, but we can now do some of that cleanup work and get those deactivated or even removed if needed. If you do have concerns about that, please go ahead and submit a contact us request in the MyUI Employer Plus system for assistance with that. And then just finally to leave you all with, we do have some wonderful resources and toolkits available on our website. There is a UI employer workshop coming up on June 24th. These are really wonderful workshops that have a wealth of information. They are for employers and they are free. They go over different topics like correcting wages, how premiums and benefits are calculated, using online tools to manage your account, proper classification of workers, really some great topics that they go over in those meetings. So I encourage you all to attend if you feel it would be beneficial. There's also some additional resources about electronic communication requirements. So if you use sides or if you need to update your correspondence preferences, really great resources on the site there. And then we also have the employer resources and TPA toolkit. And then as always, we always encourage you to sign up for the employer or TPA monthly email. And that just about wraps up UI. And I believe I'm sending this over to Amy. Thank you.
Thanks, Victoria. This is Amy Kingston. I am the manager of claims and employer programs with the Division of Workers' Compensation. So we have a very exciting summer for the Division of Work Comp with a pretty massive upgrade. So we are switching from EDI, which stands for the Electronic Data Interchange, from 1.0 to 3.1. This change is going to occur on July 9th. So as of July 8th, you can submit any of your EDI 1.0 files to the system. And then after that, we will be accepting those brand new 3.1 files. If this doesn't make sense to you, this is how insurance carriers report to the division their insurance information. So how much has been paid to an injured worker and whether or not they are admitting to a claim. So if you're not a third-party administrator for workers' compensation insurance claims, and it doesn't make sense to you, that's fine. This is specifically for them. Related to that, we have proposed some changes to our Rule 1 and Rule 5, and we recently had a rule hearing on those. Those rules in general were changed to reflect this big change that we're going to have with our electronic data interchange. But if you're interested in seeing what those proposed rules are, they are on our website and they will become effective July 1st. Speaking of tech updates, we're modernizing our system. So because of this ginormous change that we're making with our electronic data interchange system, we also have to upgrade our internal system, which is very exciting. We haven't had an update in literally 30 years. And so our new system called CoComp will come on live in July. This summer, it will be primarily for internal staff, but insurance carriers and third-party administrators will also gain some limited access. They will be able to submit some documents and look at what has been submitted through that EDI process. Our next phase, which is the very exciting phase that will happen fall of 2027, our system will be opened up to injured workers, employers, medical providers, attorneys. Basically, if you interact with workers' comp, you'll be able to log into our system and see the status of your claim and what has been filed. That is very exciting, and that will happen next year. I'm sure there will be more coming about that shortly. And last but not least, we really wanted you to be aware of a scam that was reported to the division, which was targeting injured workers. So we found out several months ago, and we've been doing a lot of outreach in order to make people aware. And this is just another notice. And that is that individuals who had been injured in a workers' compensation incident, so they were at work and they were hurt and they had a claim, people were reaching out to them. And it was pretty elaborate. They were scheduling them for hearings. These individuals were, in fact, attending hearings with judges with orders. And at the end of the day, these orders indicated that the injured worker needed to pay a substantial amount in order to receive benefits. So this is my reminder to anyone that if anyone at any point asks you for money to pay fees or deposits or a court fee in order to receive workers' compensation benefits, that is not accurate. Workers' compensation is 100% paid by insurance carriers, and there is no fee attached. There are no overages attached to anything that could be paid to an injured worker. If that happens, you are welcome to, of course, contact the police, or you can reach out to us directly if you would like more information, or just to verify if it is the way that this actually happens. So please let us know, or if you hear someone who's having that sort of situation, please direct us to us. That is it from the Division of Work Comp, and I'm going to turn it over to Jackie Wilson.
Thanks, Amy. Good morning, everybody. I'm Jackie Wilson. I'm the Public Safety Manager within the Division of Oil and Public Safety. And on behalf of our Division Director, Mahesh Albuquerque, I'll share a few updates with you today. To begin, we want to thank everyone who participated in our stakeholder efforts over the last couple of years related to our regulatory oversight of electric vehicle supply equipment. We will be having the new regulations for this new alternative fuel industry take effect on July 1st of this year. And we're so thankful once again to everyone who provided your input to help us make sure that our regulations are safe and provide equity in the marketplace so that everyone who uses a publicly available electric charging station gets what they pay for, while also having common sense regulations that provide a level of understanding of the industry, which was also considered in the feedback that everyone provided to help us develop these regulations. We also have some resources that we regularly provide from OPS, beginning with our periodic bulletins that several of our programs publish. We do provide those throughout the year as we have new and relevant information to share with you. And so if you happen to miss our last set of bulletins, those are also publicized on our website for you to refer to. For many of our programs, we're actually planning to publish our next round of bulletins within the next couple of months or so to publish our summer edition. So you can also be on the lookout for those coming soon. Also, we do have a petroleum program guidance document that, amongst several topics, does provide information for owners and operators of regulated retail fueling stations and their consultants to know the proper procedures to follow when it comes to addressing a release of spill of fuel from one of those regulated storage tanks at your location. Connected with that, we have also recently revised our recognized environmental professional program. These are the folks that take from being a consultant, they take it to a higher level of accountability and strengthening of requirements to be able to take a certain level of leadership and accountability when it comes to overseeing fuel cleanup. And thus far, we've had 32 folks who have accepted the charge to take on this higher level of responsibility and accountability to meet more stringent standards when it comes to their oversight of fuel cleanup projects. We also, on our public safety side, have recently put out a call for applications for grants from the Damage Prevention Fund that application period has closed, and the Underground Damage Prevention Safety Commission, who is tasked with determining who to award grants to, has recently voted to determine who to award grants to for a grant period that would begin July 1st of this year. And once we wrap up all of the appropriate notification steps regarding those awardees, we'll be able to share that information soon. And that Damage Prevention Fund grant is for entities who have developed educational programming connected with safe digging and providing for increased emphasis on worker safety and public safety within that realm of safe digging. Finally, we want to note an engagement opportunity related to our petroleum storage tank fund, that any owner operator of a regulated fueling station who has had a release of fuel from their tanks or their gas pumps from January 1st, 2025 and forward, you may apply for reimbursement through our new process, in which you can get a 10% deductible for up to the first $100,000 of expenses to handle that fuel cleanup, as opposed to our previous process where you had to have $10,000 available to front the front end of that cleanup process. So if that does apply to you, if you have had a fuel release from January 1st, 2025 and forward, please look at the information on our Petroleum Storage Tank Fund page for more details about how to utilize this new 10% deductible approach. We've also had a few recent outreach efforts, because our emphasis is very much on education to achieve compliance. And to that end, just last Wednesday, we had efforts both in our conveyance and amusement rides programs. First, in our conveyance program, related to the required continuing education training that we host annually for licensed conveyance inspectors to ensure they continue to meet our standards of safety when they are conducting those inspections. And conveyances does include elevators, escalators, automated people movers like the walkway at DIA. And so we ensure that those inspectors comply with the appropriate safety standards as they conduct that training. And we also provided some training to operators of amusement rides and devices around the state through our Keys to Compliance platform. And we did have a great turnout for that, and a lot of participation from those owners and operators to ensure they comply with our operational standards for their rides. If you do have any questions, to kind of bring it back to our first topic of related to our EV charging program, please go to the new portion of our website that we have created to answer any questions and provide information on that topic. With that, I'll turn things over to Eric to provide updates for labor standards and statistics.
Thank you, Jackie. My name is Eric Yohe. I'm a manager for outreach and legislation with the Division of Labor Standards and Statistics. And we'll go to the next slide here. So generally, in these compliance quarterlies, I talk generally about us being the resource for wage and hour issues. And we're still that. Most of what we do is help provide compliance assistance and education about wage and hour issues, paying wage deductions, those sorts of things. However, I'm going to talk about two relatively niche requirements or things today. The first one is specific to direct care employers and their employees. So House Bill 25-1328 requires direct care employers to provide documentation of what's called a Know Your Rights training, which is administered by DLSS, the Division of Labor Standards and Statistics, and is supported by Healthcare Policy and Financing. This is a new requirement. We are still working on this Know Your Rights training that all direct care employees must take and provide documentation to their employer that they've taken it. This direct care training is still being built, but it will be available online no later than October 1st of this year. And it can be found through what's called the Learning Center on HCPUF's Direct Care Careers platform. DLSS and HCPUF will be communicating to employers and employees through all our communication channels when the Know Your Rights training is available. And if you have any general questions or any questions at all about this Know Your Rights training requirement, please contact us with any questions you have about that training. Okay. And we also have an engagement opportunity that's coming up in July that we're pretty excited about, and we do hope that we'll get some pretty solid attendance with this, considering this in 2026 there's still questions and issues regarding service charges and tips and tipped wages throughout the hospitality industry. And so we would like to hear from those in the hospitality industry as part of one of two listening sessions we will be holding in July. One on July 13th, the other on July 14th. This is going to include, the topics will include the restaurant industry, including service charges, tipped wages, and other relevant issues. If you would like to register for a session to be a part of the session, and these are in person, they will be in person downtown. We'll give you more information as we get closer. If you would like to get notification to register for the session, please sign up for Labor Standards email updates. The link is here, and we'll be providing it after this presentation. We will provide further details about the event. Can you go back a second? We'll provide further details about the event on our website and through all of our other communication avenues. And we intend to do that as early as next week. Okay, thanks. Okay. And for those of you who have attended this before, this is very similar to the resources we provided in the past. If you have any questions related to what DLSS does and what we have authority over, the best place to go to is the Labor Law Guidance and Education webpage. It includes our guidance, including what we call our infos, interpretive notices, informative opinions, and our employee-focused, what we call knowledges regarding the labor laws that we enforce in Colorado. And we do have several educational videos on our website on a wide variety of specific issues. And we are constantly making new videos to update, especially based on any questions we get from the public, whether it be employers or employees. And we also have other published labor law guidance, including public notices and reports. Most important public notice and report we actually issue regularly are from our Labor Market Information Office regarding the employment status, data for employment in Colorado. And I think that's it.
Thanks, Eric. Thanks to all of our presenters. We've been our folks have been answering lots of questions in the chat, and I know some of our team wants to respond to some of these live. So I'll turn it over to Jessica to help facilitate our Q&A, but please do continue to type in your questions.
Thank you, Cher. I'm going to start with a question from Josephine. This is a long question, but it's related to family. So David, this will go to you. The question is from the employer perspective. If the employer finds out that an employee, after they have taken employer-provided sick leave, that they also qualify for continuous leave for family, how do they reconcile that if the employee did receive sick leave payment, but then also receives family leave? David, can you answer that one?
Yeah, absolutely. And I wanted to answer this question live because we had some other ones in the chat that we answered in the chat about the required notice. And that's kind of the starting point, is that as an employer, if you have noticed that your employee might be eligible for family, you are required to give them specific individual notice. So it's great policy to have reminders in like business-wide communications, but you do still have that obligation to provide that specific notice. And so that's one of the first parts of this question is when somebody comes in and says, hey, I need to take time off because I'm sick. That could actually be something that qualifies for family. And it's a good time to have that conversation with, are you planning on applying for family leave? We don't ask when somebody applies for benefits if they have received any pay from their employer because it's something that we're not allowed to adjust their benefits based on, right? So if the employee or if the employer pays the employee for that time, and then we pay benefits, we're not the ones who get to claw back that money. It's the employer who gets to recover that overpayment. The employee was still entitled to those benefits. We still have to pay. So we don't ask about that. It really is to the employer to ask when somebody is taking that leave, if they are going to be applying for benefits. And what we do try to do is communicate that as quickly as possible through our HR portal to employers to know that somebody has filed a claim and has told us that they are taking leave. So we do try to communicate that information to you as quickly as possible to know that both somebody has applied for and is taking leave, but we don't ask if they've received anything from the employer. That is a great conversation for you to have when you've got somebody who is going to be out on particularly any type of extended leave, is to ask if they are pursuing any type of benefits. So then and can make those adjustments to any of your programs.
Thank you, David. I am going to hand you another one, David. This one is, the question is from Justine. Are there any updates for FICA FUTA tax withholding and reporting requirements for the family division?
Yes, and Justine, I think you probably did a huge favor for everybody here asking the question that lots of people wanted to ask. So thank you for doing that. A little bit of history here. About a week before the end of the Biden administration, the IRS issued guidance on FICA and FUTA withholding that indicated that employers may owe employment taxes for benefits that we pay in certain limited circumstances. We spent the year working on getting a system in place to provide information to employers to allow for that money to be calculated and paid. And then this time they gave us 2 weeks, but 2 weeks before that was supposed to go into effect on January 1st, 2026, the IRS delayed its implementation. So where we are right now is exactly where we were this time last year, which is we expect that the IRS regulations will go into effect on January 1st of next year, unless they extend it again. We have no reason to believe they will do that. We also have no reason to believe they won't do that. Pretty much everything the IRS does is a surprise to us at this point, and to everybody else. They don't give us any advanced warning. So where we are right now, we expect on January 1st, 2027 for those guidelines to go into place. We will be providing information to employers regarding the benefits that we've paid so that employers can calculate the employment taxes that they may owe based on those benefits. We're also working on our system to calculate the taxes that we may be required to remit to the IRS based on that. and withhold from benefits on behalf of claimants. So no real change. We expect that that will go into effect on January 1st, 2027, unless we get updated information from the IRS, which could happen at any point between now and December 31st.
Thanks, David. I'm actually going to jump in and respond to Jennifer's question. Jennifer is noting that employers do report into two divisions within CDLE, the Division of UI and the Division of Family. And we know that those do seem like duplicative reportings every quarter, and we recognize that there's some opportunity to streamline those. There are a few nuances, between the requirements of the two programs, and that's why current state we do have two separate reporting in mechanisms, one through My UI Employer Plus on the UI side, and My Family Employer Plus on the family side. So we are working on a more streamlined reporting in process. We recognize quarterly wage reports are very similar. Premiums are different, as you all well know. But Jennifer, we are working on enhancing the experience such that you are not reporting redundant information to one state agency. So hope to have more to share at upcoming webinars for our employers on that front. Jessica?
Thank you, Cher. I am going to put Victoria Hull on the spot here. Victoria, there's a couple questions about QuickBooks and whether or not those are automatically reporting quarterly filings. I think this might be a question that we need to have QuickBooks answer on your behalf, Christy, but Victoria and or Lindsay in Family, since QuickBooks does interface with the Family Division as well. The question is, if I have my account linked up with QuickBooks, does it automatically report my quarterly findings? And do I need to do anything more? They have one remote employee in Colorado. And that's it.
Yeah, thank you. For UI, QuickBooks does not automatically file on your behalf. However, if you have them set up as a TPA, an associated TPA on your account, and they have stated they will be doing that, then they would be filing on your behalf. So I would absolutely follow up with QuickBooks in that respect to confirm that. But just because you see it in your QuickBooks program does not mean that it automatically transfers over for UI. And I'll pop it over to Lindsay for the family piece if theirs is different.
Thank you, Victoria. Sorry, it took me a second to get off mute. Our system is very similar to unemployment insurance system in that we do allow QuickBooks to report on your behalf, but it is not an automatic feature. That is something that you'll need to work with your with QuickBooks on in order to get that get them reporting on your behalf.
Thank you, Lindsay. Next question I'm going to hand over to David. The question is from Lauren. She's asking, I have an employee who recently took family leave for medical reasons. This employee works 32 hours a week and their annual salary is already adjusted for that. However, when they put that into family for the leave, the actual payments they received were reduced from what they were entitled to because the system was targeting to 32 hours a week instead of 40. The question is, are they out of luck because they didn't know to file as if they worked 40 hours a week in order to get their full entitled benefits?
Yep. And so that employee should definitely request a reconsideration of their benefit amounts. We will look at whatever information they can supply, including pay records, to see if we need to recalculate that. If after the reconsideration they still disagree, then they do have a right to have an appeal with a hearing officer, but we can definitely give that a manual review. Now, it is possible that they were paid the right benefit amount because we do base benefits on the individual's average work week. And so what we would do is take, their annual salary and divide it by 52 and get to their benefit rate. And then we calculate out based on their routine work week. So it may be a question of calculation, and it may be that it was calculated appropriately under our regulations, but we're always happy to take a look at that and review that manually. And they should have instructions in the determination they received for how to request that reconsideration. and guide them through that. And anytime anybody believes that their benefits were improperly calculated, they should request that reconsideration.
Thank you, David. I have another question for you from Christy with regard to leave. What if the company policy is unlimited time off, so folks are never using paid family leave?
That's a great policy. And I hope employees at that company are able to access that leave. Our program is available to all employees, regardless of those policies. And so even sometimes with employers that offer what they would describe as unlimited PTO, there can be an expectation that it be taken in smaller chunks. Those employees might experience something that requires a extended period of leave, for which the employer would want to restrict that PTO. And so they're still eligible for family. They're still able to come in and get those benefits. Applying for family does come with job protection as well for those employees. So if there's going to be some kind of an extended absence, we do see employees and employers who don't have those types of policies use family for shorter absences. But I would expect for some of those employers with more generous PTO policies that where family is really going to be useful is going to be for the more catastrophic leave reasons. And we're here for those employees if they need it. And they do always have that option of accessing family instead of the PTO, or using that PTO as a top off if the employer agrees.
Thank you, David. I'm going to hand it over to Victoria next. Our question is from Shannon. She says, I'm having problems with our TPA saying they get no documentation from the state. Since she can't see what we are sending to the TPA, is that really the case? How can I get a copy of what is sent to the TPA since they're struggling with this? Victoria, can you answer for UI?
Yeah, absolutely. So for UI, it could be dependent on how the TPA's roles are set up and depending on what preferences you gave for the TPA roles. It could also mean that perhaps you have a different email address on file for electronic correspondence. So the easiest way for UI to troubleshoot that would be for us to connect you with a staff member and make sure that your account is set up correctly, as well as your TPA association and all of the roles that they have. I will send you a chat with my direct email so that we can start the conversation and I can get you in touch with an individual.
Thank you, Victoria. My next question is for David and perhaps Lindsay. There are a couple related questions here. One from Michelle. She's asking for visibility into the total hours that are posted on the employer view of My Family Plus Employer. I think the question is, how can they see how many hours their employees are taking for family leave? And there's a similar question that may have already been typed out because now I'm not seeing it. But in a general sense, how can employers see the amount of family payments their employees are getting and how many hours they're claiming?
Yeah. So the amount of benefits would be available through our HR portal. There is a certification required for that, that you need to know that information for benefit coordination. Now that does include overpayment of wages and other programs as well. So you should be able to access that information. Lindsay, do you have any additional insight into what information would be available and how the employer could access it?
Not off the top of my head, we'll be happy to provide my contact information and we'll be able to get the answers that you need.
All right. So yeah, we'll reach out after.
Thank you, David. Next question here, David. This is for you from Shanna. I'm a C Corp, but my only employee for now. I am the only employee for now. Am I required to pay family? Looks like Evan may have answered this, but let's go ahead and answer it live.
Yeah. And so we would consider you self-employed. So your participation in a family isn't mandatory. You do have the option of participating. And I really encourage all self-employed individuals to give a good look at the program and to decide if it is something that's worthwhile, because we offer pretty affordable coverage. If you're self-employed, you're the only person who's generating revenue for your company, which means you're the only person who's generating revenue for you. If something happens and you're unable to work, family can step in and provide you with some financial protection in those instances. So give it a good look. Your premiums would be the one half of the premium rate. So right now that's 0.44% of your wages. One thing to keep in mind is that you do have to opt into that coverage before you need it. It's insurance, right? You don't get your car insurance right after the accident, or maybe you do, but it tends not to work out so well. So if you do decide that you want to have that protection from family, go ahead and opt in, give us the wage information, and pay the premiums, and then you'll be covered. And we'll be able to provide you with some financial support if something catastrophic happens and you're unable to work.
Thanks, David. Another family question for you. Is family and FMLA required to run concurrently?
This is a complicated question. So they have one-way concurrency. So according to the United States Department of Labor, FMLA, which is the Federal Family and Medical Leave, it is protected leave. It is not financial compensation. It is strictly job protection. That applies anytime somebody's eligible. So if they are eligible for federal FMLA protection, that FMLA time should be running. It's not discretionary for either the employee or the employer. So even if the employee and employer agree that they don't want to use it, the US Department of Labor would say that's not an option. It should be used. So when somebody goes out on leave, if they're eligible for FMLA, that time runs. If they apply for family, it's going to run concurrently. But employees do have the discretion on when they use family, the Colorado program. And so in some cases, an employee may choose not to use family while they're using FMLA, in which case they don't run concurrently. That employee would then have access to family after the end of their FMLA. I know that is something that can cause a lot of problems for a lot of employers. The best advice that we can give to employers is first, make sure you're providing that employee notice. Make sure they know that they're eligible for family. You can let them know that the state of Colorado will pay them money if they apply for family. The other thing that you can do is you can offer incentives. You can't require an employee to use family, but you can make other voluntary programs contingent upon the use of family. So you can require, for example, that somebody apply for and use family in order to use a short-term disability program or to access other forms of leave that you may have available. So you can't mandate it, but you can incentivize it with other voluntary programs.
Thanks, David. We've got a lot of follow-up questions here for some of the family topics we've been talking about. So let's start with the corp question. Shanna is looking to understand why, if the corp owners are W-2 employees, even though it is their own company, they're not required. She was told at one point they were required to participate.
Yeah, and that was some of our very early analysis as we were building the system. And apologies for that. What we recognize now is that we follow the command and control test to determine if somebody is a self-employed owner, essentially, of a corporation. And so even if you are a W-2 of that corporation, you're not considered an employee if you are the sole member of that corporation and working completely independently under no direction or control.
Thank you, David. Justine also has a follow-up question, which I believe we covered, but just to reiterate, does Colorado Family have a plan to provide the information to employers regarding payments made to employees? And if so, how do you plan to do so? How often would an employer be notified?
Yeah, so that is information again that is available in our HR portal. So it's not something that we push out to employers because it is information that employers are only allowed to access if they have a specific reason for it. So you need to come into the HR portal to get that information.
Thank you, David. Okay, another family-related question. This is an example. An employee won't receive any more benefits if they have used all that they were qualified to receive when applying multiple times, correct? For example, an employee that took a month earlier in the year and is currently taking another month and is likely going to take another. I think the question is this allowed? And how do they apply multiple
Yep.
times?
So yeah, there is a single bucket of leave. Now that's generally 12 weeks. There can be an additional 4 weeks in that bucket for pregnancy complications and some additional leave if they are a parent of a newborn who's been admitted to a neonatal ICU. But regardless, that is the single bucket of leave that they get per year. Now, you don't have to take that all in one shot. You can have multiple claims for multiple different reasons. You know, if somebody needs to take some time off to care for a family member, then they need to take some time off to care for themselves, and then they have a new kid. Uh, they can file 3 separate claims. They can take leave 3 separate times, but the maximum they can take in the leave is defined by that bucket, which is usually going to be that 12 weeks.
Thank you, David. Uh, Another question here. Should an employee use employer paid sick time before using family?
It's up to the employee. Uh, and it can be up to the employer as well with regard to their policies regarding sick leave. Now, this is an area where I always want to point out the giant asterisk there, which is that from families' perspective, an employer can modify their policies around sick leave in order to account for family. But do be aware that there are other requirements out there. There is the Healthy Family and Workplace Act, and there are other programs that you need to be aware of. But ultimately, the employee should make that decision and can do that in consultation with the employer. So in some cases, it may make sense to utilize your accrued sick leave. In other cases, you may want to preserve that, and it may make sense to use family, but you do want to make sure that you're working with your employer and following their policies as well with regard to that use of sick leave.
Another family question, David, from Chris. How long does the approval time take for an employee when they apply for family, and when is the employer informed?
Yep. So that can vary pretty significantly. From the moment that we have a completed claim, we are processing most claims in less than 48 hours. And I think actually substantially less than that to get that information out. And we will let the employee know, and the employer, our system will normally do that pretty close to simultaneously. But where that becomes variable is getting to that completed claim. So, for example, somebody can come to us and say, I need to take leave because I have a medical condition. We then require them to get certification from a healthcare professional. So they have to go to the doctor and have the doctor sign that form. And then that form has to be returned to us. That can take any amount of time. And that's not something that we have any authority to regulate or control. So it can take a while from when somebody opens a claim to when it's approved. But once we have all of the appropriate information, it goes pretty quickly, and employers should know very quickly as well.
Thank you, David. I'm going to hand a question over to Lindsay in the family division to give David a break. Will family benefits taken be reported to TPAs or their third-party administrators?
It depends on how the employer has chosen to set up the contacts on their account. If a TPA is identified as the benefits contact, or if the TPA is listed as the business's mailing address, the TPA may receive that information, but it really does depend on how the employer has chosen to identify the contacts on their account.
Thank you, Lindsay. And I'm going to hand it back over to David now. Question here from Bernie. Is family funding and utilization on target with the expectations?
Yeah, great question. And I wanted to answer this one live because there was an earlier question about premiums and when the premium rate would be announced. And this all goes hand in hand. So first, Yeah, our utilization has been increasing, but it has been increasing within the realm of what we anticipated, actually a little bit lower. Premium collections have been in line with what we anticipated. So our fund solvency is very good at the moment. We have the money that we need in the fund in order to continue operating and paying benefits. And right now, our projection is that that will continue for the next 5 years. Beyond 5 years, we don't really project because you just never know what's going to happen that far out. But for as far as we can see, we're looking very good. So that is something that will factor into our premiums. Premiums rates go into effect on January 1st. We review them every year. That's not to say that they will change every year, but they will be looked at. And if there is a change, it will go into effect the first of the next year. We have to officially adopt the new premium rate by September 1st. That means going through the rulemaking process. That means we'll be announcing the new premium rate probably toward the end of July, the beginning of August, at least with what we intend to do before we hold a public meeting to receive comment on that. But regardless, it will be finalized by September 1st, so everybody will know what that is. We are still in the process of analyzing what that's going to look like. So I don't have any specific information, but I can say from our very preliminary analysis, I feel pretty good that the rate isn't going to go up. I'm hoping it'll remain stable or go down. And feel relatively confident in being able to say that publicly here. But stay tuned. We will be providing you more information on that through our newsletters. Stay in touch with the division, and you'll find out what's going to happen with that rate.
Thanks, David. A quick time check. We have some time for maybe one or two more questions. So quickly get those in. There's one question here that we spoke about early on in the conversation, but to reiterate, David, what does the family notice need to look like when an employer is telling their employees that they're eligible for a family? When you investigate, what are you looking for?
Yeah, and so I did see Lindsay put that answer into the chat with a link, and I think that you also find that link on the resources and toolkits, at least to our website, which will get you to the right information on the employer resources. So when you get the deck after today's presentation, you can access that link. We have model notices, and so you can see from our website exactly what that notice should look like, both for the posting in the public space or on your internal intranet, as well as the type of notice that you should be giving to employees when you find out that they may be eligible for leave. So we do have resources for you. We have models, we have templates, all on our webpage.
Thank you, David. And we have one last question coming in that I believe Lindsay is working on. But David, the question is, someone who works for a local government who has opted out of family, however, their employees have elected to opt in and pay their own premiums. Is the local government employer required to provide the notice to staff once they receive communication that the employee has either applied or is interested in filing a claim?
Yeah, and so we generally don't have authority to regulate opted out local governments. So once the local government has said we're not going to participate in family, uh, we don't investigate or engage in any other oversight of that local government. That said, if you know that you've got an employee who has individually opted into family and you find out that they're taking leave, I think it's a wonderful business practice to provide that notice to them to facilitate it. Local governments all have their own reasons for opting out. We understand that. But if you've got employees who are participating in family, we're not going to come in and tell you you're doing something wrong or tell you that you need to do anything, but always wonderful if you can help them out. And we do appreciate that.
All right, David, thank you so much. That's all of our questions. I'm going to hand it over to Cher to close us out.
Thanks, Jessica. David, you get the gold star today for being the guy with the big brain. Thanks for all of the questions, and our panelists for all of your comments and insight into your programs. I will say that we hope these are useful. As I mentioned at the top of the hour, everything will be recorded. Everything that was recorded will now be shared out with attendees. Please do take a second to complete our survey. We may want to resume our family-specific webinar series. We devised those when we deployed the program several years ago, and so many family questions. We want to make sure you have the answers and appreciate your time. And as always, feel free to connect with us outside of these opportunities if there's anything we can do to be supportive and helpful as you run your business in Colorado. Thanks so much, everyone. Have a great day. See you next time.